In this lesson, you will learn the basic strategy for buying in an uptrend. An uptrend signals that big banks and institutions are buying, and in doing so, they are controlling a certain price level, and that price level is the higher lows. Therefore, the direction to trade in an uptrending market is to buy long, and to do so, we look for a demand zone. But we don't want to look anywhere on the charts for a demand zone. Where the demand zone is located in the uptrend is critical. Consider this carefully. For any demand zone that is located below the controlling swing low of the uptrend, price would need to cross the controlling swing low to fill that order. Understand that when price crosses below the price point of the swing in control of an uptrend, the uptrend is no longer valid, and this would defeat the purpose of placing an order to go long. This is why we only go long within demand zones located within the breakout segment of the uptrend, above the controlling swing low and below the most recent high. Recall that when we previously went through the trend identification process, we related the three trend boxes to our core formations: rally-based rally, drop-based rally, drop-based drop, and rally-based drop. In this case, the trend boxes look like a rally-based rally. Now consider that if we were to move to a higher time frame, these candles would merge together to form a rally-based rally formation, per the example. Now what do we do with a rally-based rally? The action we take is to buy as price retraces to the base of the rally-based rally. We can apply this concept as well, looking within the breakout segment, above the controlling swing low and below the most recent high. In doing so, we increase our probability of success by weeding out lower probability zones. We then go back to the 5-step zoning process to test the quality and structure of the zones we've identified within the breakout segment, and we do that using the odds enhancers. Again, for strength, we look for a move out of at least 2 to 1 and a breakout above the distal line of an opposing supply zone or a structure that represents selling. We also check for time to ensure there aren't too many basing candles, and we want a zone that is fresh where price has not yet returned. We look to buy the retracement within the uptrend where we can determine with high probability that unfilled institutional buy orders will be left behind. This is where we will place our limit order. Now you know the basic strategy for buying in an uptrend. That is to confirm the trend and identify a quality demand zone within the uptrend's breakout segment. Before you move on, go back to any previous uptrends that you've identified and look to buy at a demand zone within the uptrend breakout segment. The uptrend breakout segment demand zone should be located above the controlling swing low and below the most recent swing high. Hope to see you in the next video.